key advisor, wealth management CEO, is with us as well, Eddie Ghabour. Eddie, I got to start with you because you've been bearish, you've been right, you've watched the carnage from the sidelines. Any sort of notion maybe to jump in after that CPI report this morning?
No, nothing changed this morning, Charles. The only thing we would look to buy on dips here over the next couple of weeks as we go into year end is if we saw a significant drop in healthcare or staples or even treasuries. You know, treasuries have been a great trade for us as we were buying them when the yield was over 4%. So we've got some nice appreciation there. But we're continuing to play defense to year end because I strongly believe we are heading into the last phase of the bear market, especially on the growth side. And that's usually the most painful part. So in my opinion, because we have the luxury of being able to be patient and not having to chase because of our positioning this year, we're going to be cautious going into year end because I think we're going to see a pretty sizable drop in the first quarter.
Eddie, what's your fear here? Do you have a year-end target for next year? Or is it too early?
So my biggest fear is the Fed over-tightening. I think they are already have over-tightened. But Powell has made it very clear. His biggest fear is that inflation accelerates back up, and that would be disastrous for them.
Right.
So he's already said he would rather over-tighten. And when you over-tighten into the economic slowdown, that to me is really clear is what we're going to be going into next year, is when you're going to see these risk assets test new lows. There's really going to be nothing left to sell except for the larger cap names because of what's happening in the carnage in the other sectors.
Eddie, Kenny, thank you both very much. Appreciate it, guys.